I think the problem with all of us, I mean, there are even like, great big traders. I mean, he's been trading for like 20 years. He's a multi-million-dollar trader. And he always says, my biggest problem is I overtrade. I think overtrading is just the natural byproduct. I mean, this business is the whole, I heard a great line the other day on Twitter. The guy said, do you select a trade or does a trade select you? And I thought, wow, because how many times has a trade selected us? How many times have we fallen for either, FOMO or, oh, it's running, I gotta trade the momentum. Oh, it's fallen enough, I'm gonna make bid on this thing, and it's, and you understand that it's just basically a falling knife. We make so many of those impulsive mistakes because basically the trades select us. That I think it's advice for everybody. We can all trade less and do better. And that's a never-ending struggle in this business is to just be more selective. Absolutely.
Discipline and psychology. Discipline is a huge thing because, okay, so let me give an example. I do some coaching, very little coaching. People will take my classes and they'll learn the techniques, but virtually none of them actually apply the techniques that I teach. Virtually none of them. So let me give an example. I have a high-end coaching client, pays me a lot of money. I put out my personal trades to my clients every single day. Every trade I do, it's revealed. So everybody can see if I'm making money or not. It's not, I can't fake it. So let's call that portfolio C, which is for Courtney, okay? That's my total portfolio. Here's one of my clients who's trading, supposedly following my advice, but is losing money. How is that possible? So we analyze his portfolio and he is buying all of the losing trades in my portfolio and missing all of the winning trades. Now that's so common. So so portfolio A is the losers, portfolio B is the winners, and portfolio C is what I actually did, which is the combination of A and B. People will cherry pick. And the question is, generally speaking, people will cherry pick the losers, not the winners. I've seen this happen for decades. There's something in the human mind that if you give them 10 trades, they'll pick mostly losers. They won't do them all. They'll only pick the losing trades. Now, I'm being a little bit cynical here, but there's some truth in what I'm saying as well, because people won't follow the rules. They won't. They simply will not do it. You hand them a button, and if they press the button, $100 bills come out, they still won't press that button. They say they'll press the button, but in the real world, they won't. And that's because of human psychology. Let me give an example. If I tell you, Etienne, here, if you press this button, you get a $100 bill. You're gonna go, no, that can't be right. I got $100, that can't happen. So you won't press it because you won't believe it. Okay, all right. Then you'll say, well, I'm smarter than that button. So if I'm smarter than a stupid button, I should make $200. So I'm not going to press the button either. So you see, humans continually seek complexity. They seek their ego to be involved in the trading process. They won't allow themselves to make money, which is easy in the market if you allow it to be easy, and hardly anybody allows it to be easy.
Those characteristics, yes, would help a business owner in trading very, very much. So I was just talking about the personality trait of the people who want to lead and make things happen. Or I'm going to take, there's people who are very good at business who are turnaround artists. And they can go into a business and they can turn it around. They can make that happen. Okay, well, in trading, you're not going to make any financial market. You're not going to make the euro do anything. Right?
Right.
It's not going to happen. You don't have that power. So that's the thing I was talking about, was that personal characteristic. Now, if a business owner has the ability to, and by the way, they say actually good leaders also are great followers. So for those who are great followers as well, then yeah, that characteristic, then they can bring that to the market and possibly do very well. So other people that I find and it's again generalizations, right? There's many exceptions to the rule. But again, it just goes toward some common characteristics. So for example, people who are MDs, engineers, CPAs, I have found, and by the way, I've shared this, or I've had other people share this with me as well, who are teachers. They say, yeah, we have a hard time with those people as well. And again, it's if they have the characteristics where they're perfectionists. So now an engineer needs to be a perfectionist, right? Because if they're going to design a bridge, that bridge better be darn perfect. Otherwise, people could die. So that serves them exceptionally well in that profession. But when it comes to trading, trading is not so cut and dry. It's again, always fluid, always moving. And so if you expect perfection, well, you're going to be very, very disappointed. You're never going to catch the end of every move. You're never going to hold on to the end of any trend. You just, that's why I find that some of the best traders actually are poker players. Poker players, again, generally make great traders because they're not perfectionists. They're used to managing risk. Now I'm talking about professional poker players, the good ones, not the bad ones. But, they've learned that, okay, I can't control what cards are dealt me. Same in trading, right? We take the cards that are dealt us. That's beyond our control. All we can do is evaluate, okay, I got these cards. And then, okay, statistically, now what are my odds here? Okay, and most professional poker players will fold most of their hands because they just say, well, odds are not in my favor on this hand, I fold. The amateurs, they play more hands than they fold. Professionals fold more hands than they play. And so the patience comes in. I would say, one of the primary personal characteristics of a professional trader is patience and waiting and waiting and waiting. And that's the same with the poker player. But then when they get the odds on their side, then the poker player will definitely play that hand.
One of the biggest problems of beginner traders is that they either do not understand what risk management really is, or they just cannot respect it. So very often we see traders take the challenge and trade it, unfortunately violating the rules without even understanding that rule in the first place, right? So there are very few basic rules that everyone has to learn before they have to embark on this journey to trade their TMO account, right? So learning how maximum daily loss or maximum loss works is absolutely crucial. That's the core of a risk management. Everyone has to understand it. If they don't, they probably are not serious enough to be in this. There are some traders who are perfectly comfortable with that. And on the other hand, there are people who are stressed when they manage bigger accounts, right? So it really depends from trader to trader. As I said, somebody doesn't really want to waste their time trading $10,000 account size. They prefer to have 200,000 and more when it comes to our scaling plan, or more accounts at the same time. So that is possible, of course. There are traders who prefer to rather be, humble and not to go overboard because the big numbers stress them. That we see both of these kinds of traders.
Let me just ask you, how many times have double bottoms turned into a break? How many times have double tops have turned into a breakout? If you look at any pattern on a chart and just quantify it, like sort of just simply go, let me take a look at the last 10 examples of this. You're gonna very often come to basically a 50-50 conclusion. There's very little quantifiable edge. A lot is very interpretive. It's really, really interpretive. So that's why I find the whole idea of zones really personal. I think it's very hard to kind of quantify it with the kind of stuff where everything is input into a mathematical formula. It's giving me signals, and even then, by the way, all those signals mean nothing unless you create context. That's what I meant about, I only trade from the strong side of the market. Like, I think it's so important to have context. Like maybe one idea is, if you think that the market is an uptrend, like euro yen, is an uptrend, right? Which means that all you're looking for is to break those zones, break the zones to the upside, or you're going to buy the support in euro yen because it is basically an upward trending pair. So I think that the hard part is people try to go the other way, and the other really, really big nobody's more guilty of this than I am. Everybody says they want to trade trend. Everybody in reality tries to buy bottoms, sell tops. Everybody tries always to top tick and bottom pick the market, which means that they're always inevitably trading on the weak side of the market. They're trading essentially against the big trend. Now, sometimes they're going to really pick that top, and it's going to be that one great trade. And sometimes even that great trade, when they get a big turn and they're able to make 1,000 pips, that's wonderful. But that is basically a lottery ticket. And I think, and people love to hear those stories, but they are completely impractical, in my opinion, in real life. In real life, the real money is made by actually staying on the strong side of the market and in going with that direction. And what happens, people make a little bit of money on the strong side of the market and they switch around. They go, oh, I've made enough money, it's going to go down, I'm going to short. Inevitably, it just keeps squeezing them higher and higher and higher.
I kind of want to reiterate the point that, that thing about Jesse Livermore, that he never adapted. And our job as traders is always to adapt to the market. That may or may not mean changing asset classes. But if it doesn't, if it means we're going to stay with the same asset class, then we always have to adjust to the market as is. We want to think that the markets will always be the same, and we like it to be that way. And it just doesn't work out that way. The bear trend that we had in COVID, some people thought that was going to go way further. It was going to last for years. It lasted a month. The bull trend that went from March 20 to February 21, people thought that was going to go ad infinitum. It didn't. And so it's important to understand that volatility is elastic. Markets are always changing. Our job as traders, the first job, my approach is simple. My first job in the market is to control risk. Once I can control risk, then my job is to extract alpha out of the market. And I do that by adapting to the market that's always in front of me. And if you have skills, then you will be able to adapt. A lot of people are focused on strategies. Strategies come and go, skills never die. If you think about it in the game of football, or what the Americans call soccer, passing, dribbling, trapping, footwork, those skills today are just as important as they were in the game 100 years ago. Leonardo Messi, one of the best footballers of all time, one of his great strengths is that he is exceptionally good at one of the core skills, dribbling. He can dribble and have faster touches on the ball, and his body has a metabolic rate that allows him to control his energy or burst more energy in quick bursts faster than anybody. But he's just applying the core skills of soccer. And so trading is very much the same way. If you have the core skills down, you can trade any instrument, any time frame, or any environment, and you'll be able to adapt to any market in front of you and continue to pull money out of the markets. That's our job as traders.